Have you ever wondered what happens when a real estate market gets so broken that even the most powerful person in the world has to resort to desperate measures? Well, we're about to find out because Donald Trump just proposed something that should terrify anyone who understands how money works. A 50-year mortgage program that could fundamentally reshape how Americans buy homes forever. Now, before you roll your eyes and think this is just another political stunt, let me stop you right there. This isn't about red versus blue politics. This is about basic economics, and the numbers behind this proposal are absolutely staggering. We're talking about a policy that could affect every single person watching this video, whether you own a home, rent an apartment, or are still living in your childhood bedroom wondering if you'll ever be able to afford your own place. The median home price in America has reached levels that would make your grandparents laugh if it weren't so tragic. We've got first-time buyers who are now approaching 40 years old on average. That's not a typo. The same age when previous generations were already thinking about paying off their mortgages entirely. Meanwhile, today's buyers are celebrating when they can scrape together a 1% down payment and qualify for terms that stretch longer than most people's entire careers. But here's where it gets really interesting. Trump's 50-year mortgage proposal isn't happening in a vacuum. It's a direct response to a housing crisis that has spiraled so far out of control that traditional solutions just aren't working anymore. When the standard 30-year mortgage leaves the average family spending almost half their income just on housing payments before accounting for taxes, insurance, and maintenance, you know the system is fundamentally broken. So what exactly is Trump proposing? The details are still emerging, but the core concept is simple enough to understand and terrifying enough to keep you awake at night. Instead of the traditional 30-year mortgage that has been the backbone of American homeownership for generations, qualified buyers would be able to stretch their payments across 5 full decades. 50 years. That's longer than most people work. That's longer than some countries have existed in their current form. Now, on the surface, this might sound like a solution. After all, if you can't afford the monthly payments on a 30-year loan, spreading those same payments across 50 years will definitely make them smaller. Basic math tells us that much, but if you think that's where this story ends, then you haven't been paying attention to how these financial innovations tend to work out for regular people. The immediate appeal is obvious. A 50-year mortgage could potentially reduce monthly payments by hundreds or even thousands of dollars compared to traditional financing. For a generation that has been priced out of homeownership entirely, this could be the difference between renting forever and finally getting those keys in their hands. The political messaging practically writes itself. Finally, a way for hardworking Americans to achieve the dream that has been slipping away from them. But here's what the politicians aren't telling you about 50-year mortgages, and it's something that should make every potential homebuyer think twice. The total amount of interest you'll pay over the life of one of these loans is absolutely mind-boggling. We're talking about numbers that would make even seasoned real estate investors do a double take. By the time you finish paying off a 50-year mortgage, you could end up paying more in interest alone than the original purchase price of your home. Let me put that in perspective for you. Imagine buying a house for $300,000, which is roughly the national median right now. With a traditional 30-year mortgage at current interest rates, you might pay around $200,000 in interest over the life of the loan. That's already painful enough. But stretch that same loan across 50 years, and you could be looking at interest payments that approach or even exceed $400,000. You're essentially buying your house twice, maybe even 3 times over. And that's assuming interest rates stay exactly where they are today, which is a pretty big assumption considering the economic volatility we've been experiencing. If rates go up during the life of your loan and you're locked into an adjustable rate product, those payments could become completely unmanageable. But the real kicker is what this does to wealth building. The whole point of homeownership, at least traditionally, has been to build equity over time. You make your payments, and gradually you own more and more of your property, until eventually it's paid off and becomes a major asset in your retirement planning. With a 50-year mortgage, that equity building process slows to an absolute crawl. The implications of this proposal go far beyond just individual home buyers, though. If 50-year mortgages become commonplace, we could be looking at a fundamental transformation of the entire housing market that makes today's affordability crisis look like a minor inconvenience. Think about what happens when you introduce a financial product that allows people to borrow more money for longer periods of time. Economics 101 tells us that when buyers can afford higher monthly payments, sellers will raise their prices to capture that additional purchasing power. It's the same phenomenon we've seen with student loans, where easy access to credit has contributed to skyrocketing tuition costs at universities across the country. So while 50-year mortgages might initially make homes more affordable on a monthly payment basis, they could very well drive up the actual purchase prices of those homes over time. We could end up in a situation where homes cost even more than they do today, but now buyers are trapped in debt for literally half a century. It's like putting a Band-Aid on a severed artery and calling it healthcare. The banking industry, of course, is probably salivating over this proposal. From their perspective, 50-year mortgages represent a goldmine of guaranteed interest payments stretching across multiple decades. They get to collect interest for 20 additional years compared to traditional mortgages, and they get to do it while taking on relatively low risk, since these loans would likely be backed by government programs just like current mortgage products. But here's where things get really concerning from a systemic risk perspective. 50-year mortgages would create an entire generation of homeowners who are essentially permanent debtors. These people would never truly own their homes in any meaningful sense. They'd be making mortgage payments for their entire working careers and potentially well into retirement. When you're still paying off your house at 75 years old, you're not building wealth, you're just renting money from a bank with extra steps. The demographic implications are staggering when you really think about it. We're talking about creating a class of people who will be passing mortgage debt down to their children, not assets. Traditional home ownership allowed families to build generational wealth by eventually owning their homes outright and passing them down or using the equity for other investments. 50-year mortgages could effectively end that wealth-building cycle for millions of American families. And what happens when these borrowers inevitably run into financial difficulties? Job loss, medical emergencies, divorce, economic recession. Life happens to everyone eventually. With a 30-year mortgage, you at least have the possibility of building enough equity over time to sell your home and walk away with something if you need to relocate or downsize. With a 50-year mortgage, you could be underwater on your loan for decades, trapped in a home you can no longer afford but can't sell without bringing cash to the closing table. The political timing of this proposal is also worth examining. Housing affordability has become such a critical issue that politicians are clearly feeling pressure to propose something, anything, that sounds like a solution. 50-year mortgages check that box perfectly because they address the immediate symptom of high monthly payments without tackling any of the underlying causes of the housing crisis. We're not addressing the supply shortage that's driving up prices in the first place. We're not dealing with the zoning restrictions that prevent developers from building more affordable housing options. We're not confronting the investment speculation that has turned residential real estate into a commodity for institutional investors. Instead, we're just making it easier for people to take on more debt for longer periods of time. This is exactly the kind of financial innovation that tends to blow up spectacularly a few years down the road. Remember when adjustable rate mortgages and interest-only loans were being marketed as innovative solutions to housing affordability back in the early 2000s? How did that work out for everyone involved? The people pushing 50-year mortgages today are using almost identical talking points to the people who were pushing subprime lending 20 years ago. But the most insidious part of this whole proposal might be how it could reshape American society's relationship with homeownership entirely. For generations, buying a home has been seen as a stepping stone to financial independence and wealth building. You buy a starter home, build equity, eventually trade up or pay it off, and retire with a valuable asset. 50-year mortgages could turn homeownership into a permanent subscription service where you never actually own anything